Everybody who owns a home has three buckets of wealth. Bucket one is the client's bucket. That's their ability to make money, their ability to earn wages, commissions, own a business and get money from their business or pensions, Social Security, whatever. That's how they generate income. Bucket two is your bucket. That's money that is not needed today, that's put aside for the future. 401k, stocks, bonds, IRAs, ETFs, savings accounts, life insurance, cash value, IRAs, 401ks, whatever. That is all kinds of different forms. And by the way, you have the most diverse ways to grow and give income. Incredible ways to do that. We have only one way to do it, and that is an illiquid asset that just shows up in the balance sheet that cannot be used. At Movement, we change that into something that is liquid and tell people to put less money into bucket three and give you more money in bucket two, not for your benefit or our benefit, but for the benefit of the client. Bucket three is where Cheryl and I work every day. And that is helping people. Movement Mortgage has helped over 330,000 people build wealth through real estate in our short 15 years together. And we're helping more and more people every year to build that equity, help them buy a house, help them refinance with a lower rate, help them get to more and more equity and wealth in their home, second homes, investment properties, whatever the case may be. So let's think about how this works. If you look at the top wallet, this money from bucket one goes up the wallet and most of it evaporates right off the top. And people spend it on food, clothes, and cars and kids, and cost of living goes right up. So I saw a sign outside a church a long time ago. It said the cost of living is high, but it's still extremely popular. Okay, so it costs money to live. So that money goes up to the top and it evaporates, but they try to give you at least 5% of their income. That's the national average of savings, which is not great. So they only give you about 5%. Wealthier people, of course, give you 10, 15, 20%, depending upon how much, excuse me, disposable income that they have. But you know how much they give us? On the first of the month, on the 1st of April, it's coming up real soon, no fooling. They are going to send us millions of dollars to our headquarters in Fort Mill, South Carolina. Millions of dollars is going to be coming into bucket three. And they give us religiously 29% of their income on average every single first of the month. We are your biggest competitor and we don't sell any of your products. We suck a tremendous amount of cash flow out of every single home in an investment called home equity. Now, they also have a place to live, obviously. It's not just an investment, but there's a lot of money flowing into bucket three. So now let's look at 62 plus. Well, now we're in the range of starting to decumulate for many people, maybe 65, maybe 67, maybe 70, whatever. But some money comes out of bucket one, maybe Social Security, and because they're not working as much anymore, whatever the situation is. Then they come into your office and say, hey, Mr. Ms. Financial Advisor, I'd like some of my money back. I've given you a bunch of money. I'd like some of it back. And that would be normal and expected. But they don't walk into our office and say, hey, guys, I gave you money for the last 10, 20, 30 years. I'd like some of it back. I've got a whole bunch of money stored in the house and I'd like some of it back. In fact, when we offer it to them, many of those people say, no, I have no interest in that. It's kind of silly, kind of crazy when you think about it, that they don't ask for any of it back when we have been so dogmatic about telling them you better send money in every month or else. And there's all of this wealth. We told them that we were going to help them create wealth in real estate. Well, what can you do with it other than brag about it maybe and say, well, I've got a lot of money. It really comes down to equity versus cash. When you're young, you have to take all of that cash, send it into us in payments, and then you get a bunch of equity back. That's what you get back when you make payments on a house. Well, when you get to be my age, past 62, you can say, hey, I want to reverse that process, hence the word reverse mortgage. I want to reverse that process and I want to turn equity back into cash because I'd rather have cash in retirement than equity because equity is worthless. Now, let me say that one more time. Equity is worthless. Equity has no value whatsoever until it's converted to cash. And so until you mortgage a property,